Welcome all to the Node. I am Mike, aka Veteran Crypto, and this is your place for news, interviews, and DeFi and crypto education, along with TradFi, actually. So, if you are just finding us, then and you're on X or any other platform, and you'd like to join the chat, please feel free to jump on over to YouTube. You can find us at the Node Network, all one word, and feel free to jump in the chat, ask us questions. If we're giving bad information out, by all means, tell us we're full of shit. And all I ask is you point to or cite a source to back up your claims. We're all about truth here. We're all about facts. We're all here to make money, and we're all here to shake each other up. Out of our confirmation bias. There's a lot of it out there. A lot of tribalism. You get into these echo chambers where you're trying to invest in these assets. And we all want to feel good about our decisions, and so we seek out that bullish information, that bullish alpha, when we should be seeking out stuff that isn't bullish. We need the full picture as we invest in these assets. So that's what we try to do here. There's plenty of channels out there that are going to massage your ego. They're going to tell you what you want to hear because they want your clicks, they want your likes. We are not influencers. We are educators. And sometimes we do get it wrong, and so we expect all of you out there to maybe help us on that. We've had members of different projects pop into our chats and help us, as we're doing our deep dives and steer us in the right direction. And a couple of them, Zenith tomorrow is actually coming on the show. We did a deep dive on them, and they liked what they saw, but they wanted to correct us on some things. And so, absolutely, we fully welcome that. We want to be fully knowledgeable about these assets that we invest in, and these projects we invest in. So, he didn't change his name either. He's Moonshot777.
Oh, yeah.
I almost went live with Slap Happy Sandwich on my tag.
Let me see if I can change this thing. Let me I'll do it. I'll do it in a second here.
Yeah, it's just the little three dots, down there on your down below on your little image. But no, we were gaming this weekend on Saturday, and so I had put Slap Happy Sandwich because that's my handle, my gaming handle, and Moonshot777 is David. So we just hadn't changed that yet.
Yeah, so I'll change it.
No worries. Crispy, appreciate you, brother. Jay-Z, appreciate you, and everybody in the chat, and everybody that's tuning in. But I was just basically doing my usual intro and explaining who we are and what we're about for people that might see this or might be tuning in live for the first time. That we are not a channel that is going to massage your ego. We're not a channel that's just going to tell you bullish things to get you to like and follow and subscribe and and engage with us. We are going to give you the truth. Sometimes the truth hurts. I want to know the full picture of if I'm going to invest in something. I want to know the good, the bad, the ugly. And then at least I'm investing fully knowledgeable about what I'm investing in. If you still want to invest in something that we think is shit, it's your money. Do it as you want. We're not trying to influence you to invest in anything or not invest in anything. We're here to educate. What you do with that knowledge is 100% up to you. I do not expect you to invest in all the things that I invest in. Some of the shit that I'm invested in, some of our deep dives has led me to sell it. I had a bag of Bondo. After our deep dive, I sold it. KTA, Kita. I've been going back and forth on X with people that are hating on me for the deep dive that we did on Kita. And I've taken a second and third look at some of the stuff that they've pointed out, and straight out of Kita's documentation, we were right. So that's all I'll say on that. But
yeah, no, I agree. I'm right there with you, Mike. I think what we were talking about with the Holy Trinity or the trifecta or the crypto value investing index that we were building last night.
I was going to bring that up because when we were trying to figure out the name for it,
yeah, man. So look, you got to be focused on revenue, value capture, and adoption. Those are the three things right there. If you don't
real adoption, not there's rumors of a partnership or they have a partnership and it's tokenized assets that are going to sit static on their chain, not generating any fees or revenue. The tokenomics, if they are generating fees and revenue, the tokenomics have to, the value capture is what we're talking about. Is there has to be tokenomics or mechanisms natively, in that relationship to where those fees and revenue are somehow shared with token holders. If not, you're funding, you're the bootstrap liquidity for them to build a successful business, and there's no guarantee that you're ever going to see a return on your investment other than speculative pumps. Short term, if you want to invest in those, and you want to take advantage of the speculative pumps and dumps, with longs and shorts and stuff, absolutely do that. We're not saying that these projects aren't going to pump. We're just saying long term might not be a good investment. But David,
oh yeah, well, I mean, look, like you can speculate on this stuff all you want, but and you can make money speculating on it, and I think that's great. And I just built an app called Runway that'll allow you to do that with your own quant. Okay, so if you've ever seen that movie where he's like, look at my quant, my math specialist, my quantitative. Look at him. Does he look different to you?
Is it he's the little Asian guy?
Yeah,
he's like, he doesn't even speak English.
He doesn't even speak English. Look at his eyes.
Like after the meeting, he's like, dude, I'm from California.
Yeah, and I do speak English, and my name is Jeff.
yeah.
Right. No, but so basically, I built a quant that allows you to trade, using a quant. It's called Runway. The URL is getrunway.trade. And so if you want to speculate on stuff like, real true shitters like XRP or XLM or like these just dog shit tokenomics, dog shit projects, then, hop on over to Get Runway and work with a quant. But if you want to hold something for long term, take a look at Canton.
Well, and when we say stuff like dog shit tokenomics and stuff, I mean, don't immediately let that have a visceral reaction and have an emotion. Don't let yourself have an emotional reaction about that. If you're bullish on XRP, actually go to our library, like here on our website. It costs you nothing. We're not trying to shill like some program that you have to buy into. This is our Intel library. This is all of the deep dives. Like today, we're going into Virtuals Protocol and Folks Finance. But we've done all of these deep dives on all of these projects. And each one of these, like I'll go to XRP and Ripple, each one of these has a video overview, and it goes into detail about about Ripple, about XRP, the tokenomics, how the token is used. I mean, all of this. It explains what it is that we say and why we feel the way that we do. It's based off of real data. It's based off their white paper. It's based off their documentation. It's based off our experience, because like XRP at one point was my largest holding, and as I learned more, I got out, and I made money, but I sold at $2, as it was pumping up to just over $3. Now it's before today it was about to break below $1. The whole time it was pumping, I was telling people, take profits, take profits, take profits. Those that listened, some of which in our community, thanked me. I said the same thing with Ondo during this last speculative pump. Everybody was like, it's going to the moon because of all this stuff that Ondo Finance is doing. And I kept telling them, the token has no connection to that success or that profitability if it even materializes. It's a governance token. Take profits. And hopefully people did, because it's retraced.
Yeah, I mean, look, these tokens suck, man. Like,
a lot of them.
The only reason why they go up is pure speculation, because if you actually understood the mechanisms behind these things, you would never touch them. Like, it's pure speculation, pure marketing hype. And these projects, they really prey upon people who don't know what to look for, don't know how to value these tokens, don't really understand what it is that they're buying when they swap into this stuff. I mean, Mike, look, I've worked with so many private clients one-on-one, and dude, you might not believe this, but there's a lot of people who, will pay a lot of money for private coaching and then show me, whatever tokens they hold in their portfolios, right? Yeah. And I'll ask them like, hey, you've got, this coin, and it's, 25% of your portfolio. It's, fire dumpster coin. And tell me why you put a quarter of your bag into fire dumpster. And they'll be like, well, I saw this post, this guy Garlinghouse, seems like a really good dude. And, he's talking about making money, and I just decided to ape into it. And it's like, well, you would never do that if you were buying a stock, right? People, when they buy stocks or traditional investments, they tend to do so much research that sometimes it paralyzes them from taking action at all. But for some reason, when it comes to crypto, because it's, kind of intimidating, it's so complex, and you don't really understand what you're looking at, people just kind of get sucked into hype. And then they make horrible decisions.
It is the potential upside, because in stocks, you're looking at a slow grind up. Whereas with crypto, it's like, yeah, I can take a chance on this dumpster fire coin, and it might, 50x. So like there's more risk, but there's more reward, and people love that endorphin hit. They love that rush of, maybe I'm gonna, hit it big on it. It's why fucking casinos,
I mean, yeah, bro, but like stocks have been the meme coin recently. Like,
right?
You take a look at the
honestly, we all would have been better off just investing in the fucking stock market, or the S&P over crypto.
I mean, dude, like, let's see, the S&P, dude, SpaceX is up 10% today. It's fucking crazy. Like, this is a company with $20 billion in revenue. Like, people are paying 120x sales for this thing.
Dude, negative revenue. After you take into account R&D and operational costs and all that stuff, they're operating at like net negative.
Don't worry about it. 10 years from now, it'll be
$2 trillion valuation. We're losing money. Forget about it. Hey.
What are you worried about, man? It's just like,
don't get me wrong. Long term, SpaceX, I see it doing amazing fucking things. I mean, amazing. It's gonna be long term. It's gonna be a huge invest, like a very profitable investment, unless some heinous shit goes down. But
I mean, I think that SpaceX is going to be just a phenomenal. But like, honestly, if you just value the thing on like normal traditional metrics, it looks astronomically expensive. So, but that doesn't really seem to matter to stocks right now.
Well, last night, you came up with a formula, using our, trifecta to basically grade crypto, which it's going to be interesting to see, how that plays out. And we're going to be integrating it into our deep dives and giving them a score or a value from 1 to 100 based off of those 3 parameters we talked about before: value capture, like actual real adoption and network usage. And what was the other one? Oh, fees. Revenue and fees. Like how much actual revenue and fees they're generating. So basically, we're going to start grading our deep dives, and you might be surprised at what you find on some of them. I know a couple that we looked at last night. David was like, whoa.
Yeah, well, I mean, so here's the thing, though. Like, this index that we're building, it's only as good as the data that you feed it. So garbage in, garbage out. Yes. And, you have to be, even though these AI tools are getting really, really good, you still, if you're a domain expert and you've got a lot of domain skill, you've got to put that to use, because if you just blindly listen to whatever the AI tells you, a lot of the time it's going to lie to you. It'll hallucinate, but also if it's trained on lies, then it's going to very confidently spit back lies to you. Yeah. So just always verify, don't trust. That's the mantra.
And that includes our deep dives. That includes everything that we say here. We do our best. I mean, I spend all day long, going over this stuff and, reviewing things and building out these deep dives, and, David does as well. So, I mean, and so does Jeff, but we're human, we're going to get it wrong sometimes. So don't, you can't be lazy in investing, and especially in something that moves as fast as crypto. The technology evolves, tokenomics evolve, even of projects that you might have bought into a couple of months ago. That, there could have been votes where they changed the tokenomics. It happens all the time. So you need to stay up to speed, and it's why, we kind of say you want to not spread yourself too thin and have too many assets in your portfolio, because it's going to be impossible for you to keep up with them.
Yeah, I mean, and honestly, there are very, very few large cap crypto projects that are actually legit. Very few of them. Now, I'm really excited to start taking a look at some of the really small cap stuff, because I think that the Bitcoin bear market is, I think we're getting close to the end of the Bitcoin bear. It's great to see this rally. It's June 15th. So, Bitcoin has held its 200-week moving average. It looks like it's going to rally up to maybe 70K, maybe a little bit above 70K, something like that. But the bear is still not over. And, Bitcoin really isn't correlated very well with much of anything else right now. So, I want to take a look at some of the tiny micro cap, small stuff, so that I can build like a moonshot bag of like a dozen little tiny coins.
We need to. I know we talked about it. I'm going to talk to Jeff today when I'm driving to the airport to pick up my nephew. But I want him to start giving us a heads up on those early projects. If he when he runs across something that looks really interesting, and letting us know about it, because those are those micro caps or those small caps, that he's talking about and doing the deep dives on.
Yeah, so I mean, Jeff in the chat says that he shared some news in the Discord about something. I'm gonna check that out.
All right. Well, while you do that, I'm gonna go over a couple of things I found on X this morning. So David is going to be interviewing. I'll be on the show, but David will be heading the interview on Zenith tomorrow with Gustav, their head of ecosystem. So this is from Canton Network. Every EVM transaction on Zenith routes through Canton's global synchronizer as a native network activity, consuming traffic and contributing to Canton's burn mint equilibrium. So this is the cool thing, and this goes back to the tokenomics mechanics that we talk about, and why I'm so bullish on Canton is everything that's built on Canton. All the dApps, all the use, all the banks and institutions that are using it as a connectivity, a layer for their siloed networks. All of this, all those fees that are generated, are 100% of those go to the burn, the automatic burn of Canton tokens. And as network, activity increases, and that burn increases, it slowly moves to where it is outpacing the mint, the continual mint of new Canton. And eventually, not yet, but eventually it could, with enough usage, flip to be deflationary, which could mean token price go up. So that is what we're talking about, when we on these projects that we're bullish on. The reason we're bullish is because there's actual adoption, like Bank of America, like JP Morgan Chase, Zenith, with everything that they're doing, all of the tokenization, the DTCC, all the repo markets that are being put on Canton, actual adoption, actual use. That's what we look at. Fees, even though they're just starting out, $2 to $3 million a day in fees that are generated that are burned, of the Canton token per day. It's one of the top, if not the top, revenue generating networks. This is what we're looking at. This is what we're focused on. The real projects. What are your thoughts?
Dude, well, there's a lot of alts getting big moves today. I was just looking at in the chat, Jitto. Jitto Sol plus 50%. So whenever I see stuff like this, the first thought that runs through my mind is, what does the chart look like when you zoom out? And then my next thought is, well, how much liquidity, like how much capital is required to move the price of one of these tokens by 1 percentage point? Because that'll give you kind of a sense of how liquid the thing is.
Yeah. Dude,
and so
ETH is up almost 11% on the day.
Well, it depends on where you're looking. I see.
Market cap.
Yeah, quite. So it's so frustrating sometimes, because if I'm looking at Trading View and then you look at Coin Market Cap, you don't know when the starting point is, right? Like, do they measure UTC, or is it like Eastern or Pacific? Like, so but I mean, big move. ETH at 1840, Bitcoin at 67. But just keep in mind, this is a bounce during a bear market. Okay, so like there should be, they call them face ripping rallies. That's what this is called. There should be rallies like this. The thing that might be different this time is the euphoria in stocks. I mean, dude, like that's kind of a big deal here. The NASDAQ plus 4%, just huge. gapping up, massive move. Just about everything is up. So if you're holding an altcoin and it is not up today, oh, dude, like that's a bad sign, So just make sure that if you're holding an alt and it's not up, that you reconsider that alt.
Yeah. Well, and honestly, when I first looked at KETA, this morning, it was in the red while everything else was in the green. It's since, shown some green, but
I mean, we now know that KETA is a bag of farts, stinky doo-doo bag.
Not as bad as some, but it definitely not something that like I said, I sold, I kept like $200, just like a little moon bag in case it does something, never underestimate, the FOMO of retail. So I kept a small moon bag in case it does something substantial. If I can make a couple grand off of it, if it 10x's or, something like that, I'll sell it, and just, make a little bit of money off of it.
I mean, the hopium is strong in you.
Dude, I mean, we've seen it. I mean, shit, meme coins, they freaking pump, hundreds of X, and it's never underestimate the FOMO of retail. There's money to be made there. Am I going to put anything other than a couple $100? No.
I don't know. I think about opportunity costs. Like, if that couple $100 was in something that wasn't shit, then like maybe you could actually make some money on it. But like, the way that I think about it is, now that we've gone through the deep dive research on KETA, it's like, okay, well, now we know that there is no mechanism by which like any revenues return to you when you hold KTA. So you're literally holding a bag of dog shit. So like, if I've got a choice between like bag of dog shit that doesn't do anything and like, okay, maybe this token, some other random altcoin, maybe it might, put in some multiples. I'd rather go with the thing that, maybe could put in some multiples rather than the thing where I know for sure that there's no connection between revenue and token.
Basically it's a meme coin and it gets a lot of mind share. So I'll spend $100 to feel that out. But this one, if you're not following them, Canton News, it's cantonnews.org. It's actually, Canton-focused news, and they have a lot of really good resources there. I even found an article there that I shared with David where it shows all the DeFi that's currently being developed. And some of the websites are live. Not a ton of liquidity there, so I wouldn't ape into anything on them, but definitely something to bookmark and keep an eye on. For when the liquidity, grows on those platforms. Liquidity. So USDC access on Canton just got easier. Handle Pay, give them a follow. Now supports in-app USDC bridging between Base, Polygon, and Canton Network, helping bring consumer payments closer to Canton. Do we want to read more?
Sure. Consumer payments on Canton? Huh.
All right. So it says HandlePay has expanded its native bridge to support USDC, letting users move the stablecoin to and from Base or Polygon and Canton Network directly inside the app. The bridge already supported Handle USDC. This is the latest addition, with more tokens being added soon. The update is a small piece of a larger thesis. Canton Network is known for its institutional grade infrastructure for regulated finance, yet the retail facing side of the chain remains largely undeveloped. I agree. HandlePay is hopping on that opportunity by developing products that make it easier for retail to send and receive money on Canton. I feel this is important for onboarding and network usage.
I think it's great. This is good news.
Yeah. Consumer Canton starts here is how the team frames it. The bridge is a concrete expression of that. Most stablecoin activity today still lives on EVM chains like Base and Polygon. For Canton to matter to everyday users, value has to be able to flow in and out easily. A native bridge that handles the routing, rather than asking users to navigate external bridge interfaces, lowers that barrier to entry.
Love it.
Yeah. So you know what? Yeah, I'll just stop there. So
can we use the thing? See, like there seems to be a lot of stuff like being built on Canton right now, but it's like not quite ready to actually be used. Is this something that we can actually set up and use?
Yeah. I mean, this is the website. It says.
So wait. You log in with Instagram? Like, what is that?
Looks like Instagram, Google, X, WhatsApp, Telegram, and I have some Telegram news for you, David.
That's pretty cool, actually. You can log in with all these things. Huh.
Yeah. So
okay, try logging in. See if you can use it.
All right.
Maybe with Google. Let's see what happens. I'm curious. Yeah. Huh.
Let's try.
That's actually pretty cool. So basically, this is a bridge so that you can move, I'm assuming, stable coins, back and forth from, I would guess, EVM chains to Canton and vice versa. Am I understanding this correctly?
Yes, it said between Base, Polygon, and Canton Network.
Okay, so it looks like you might have to just create an account before you try to sign in.
Yeah, that's what I'm doing here.
Okay, let's see what this does. This will be good. Sweet. Oh, you set up the passkey.
Oh, I've had that on my other accounts for a while. All right.
Good. Okay, so let's see. You're authorizing the app, and
all right. So yeah. So it looks like that. Like they said, Handle and USDC is on here. I can connect a Canton wallet, and you can send and receive money. So yeah, it's just looks like it's just a way to to bridge USDC, across Base, Polygon, and Canton. So I mean, again, a lot of the stuff on Canton is very early. A lot of the DeFi that we pointed out on other episodes is just super early. The retail aspect, because Canton was built specifically for institutions. It really wasn't purpose built for retail. But you can build dApps. And EVM dApps as well with Zenith. So there's a whole ecosystem that is being built out on Canton right now. Honestly, it's really hard for me to not just take all my dry powder and ape into Canton. I say this often. It's just there's so much going on. The tokenomics, the way that they launched the token. I've gotten to know one of the co-founders, Shaw, quite well. And it's probably one of the projects I'm most bullish on as far as altcoins.
Me too. There's still a lot of uncertainty around it, though. But I really like everything that I've learned about Canton. Tells me, okay, this is moving in the right direction. This is everything looks very positive. So I love what I'm seeing, and I really like this retail facing stuff that they've started to build out too. That's super cool to see.
No, absolutely.
What else we got going on today, Mike?
So this guy, this level playing field, he's been cracking me up. So he's the guy that I've been going back and forth with on KTA, and he's trying to justify the all of the KTA that the team, that Kita network has been sending to exchanges, and a lot of it being sold off.
You mean the dumping?
Yeah, but this is how he's justifying it.
The dumping on retail.
These are strategic reserve movements to exchanges for liquidity, market making, and operational needs. Standard for infrastructure projects scaling up.
Sure.
And other centralized exchanges hold large bags for user custody and liquidity provision, not dumping. On-chain data is fully public. If this was malicious selling, it would be obvious. Price action is influenced by many factors, not just these flows. Fundamentals, anchors, bank progress, partnerships. Continue advancing. Do better and let your ego go.
Oh, dude, see that's so great because the copium there is deep. There's some deep copium right there. And what I love about that post, Mike, is that there's no evidence cited whatsoever. None. It's just like, well, no, you're wrong. Do better. Let your ego go. And this is actually what's going on. Hold on, let me just grab my copium bag over here. Okay, I got my copium. It's like, dude, you got to prove it. Okay, like we put out deep dive research with verifiable sources.
Yeah.
If you think that what we said is bullshit, then you got to show us some evidence, man.
Yeah,
because
you got to cite a source. Give us a white paper, give us an article, give us something from their website.
I mean, but he's talking about on-chain data is fully public. Okay, great. Give me some on-chain data, bro. Like, where is the on-chain data?
The post that I commented on was somebody that had a screenshot of the on-chain data, showing all of the KTA token being moved to exchanges.
Hey man, even that, Mike, is not going to cut it. Like a screenshot.
No. But that's what opened up the conversation. Because
right. So
basically, what I did is I commented, can anybody verify this? Is what I had put, and this was his his rebuttal. It was him trying to say that the screenshot was bullshit, but he didn't cite where to go to show that it's bullshit.
What we should do, Mike. Did you ever play that game on Telegram, Hamster Combat? Did you ever play that thing? Okay, there was another game called Not. It was the Not Coin game. They were like these viral clicker games. We should create a game called like Copium or something like that. And all it is you literally just tap. You tap on your screen and it like gives you a dopamine hit. And like we could make it where it's copium on like the worst coins, the worst projects. So like basically you just like you hit your screen and then it gives you fake tokens over and over and over and over again. So like, the people who love Kita or XRP or XLM or, shit like that, you could just tap on your screen and it'll give you fake tokens. It'll make you feel a lot better.
Yeah.
So like, or maybe you could see the number go up on your projects when you tap it. And then we could just, whenever we get some stupid responses from people on X like this one, we could just go ahead and send them a link to the app and they can go ahead and tap.
There you go. Just tap.
Just tap. You'll feel better.
There's so many ways that I can pick this apart. This operational needs. That's exactly what we're talking about. Whenever we bash on some of these projects, is they are using you as liquidity. They are using you as bootstrap liquidity to build what. And I'm not saying that Kita's technology sucks. I'm not saying that they're not going to be successful as a company. What I'm saying is there is no connection to that success and you, the token holder. They are using you as liquidity, to pay for operational costs because they're not generating revenue or fees to pay their operational costs themselves.
Yeah, we see the same pattern.
You are funding their company, and the tokenomics and mechanics there's nothing that is going to include you in that success if they are successful.
Yeah, no, you're absolutely right, Mike. And like, here's the thing: we've done enough of these pieces of deep dive research so far, and we haven't even gotten through the top 100 yet. We're still like in the top 50, but in the top 50, we see the same patterns repeating over and over and over again, where it's like, okay, you've got a cool piece of technology, a cool idea, a cool project that maybe does something real. It's pretty cool, right? But there's a complete disconnect between that cool tech and the token. And so what the founders do is they launch a token that does nothing. Maybe there's some utility in the ecosystem, but there's no value capture, no adoption, no nothing. And so what they do is they launch this token, and then speculators come in, retail comes in, they bid the thing up. All of a sudden, their token has a massive market cap. And so what they do is they sell the token for cash to fund their business or to just pay themselves a salary. Who knows? So we see this, over and over and over again, where these founders, these projects, the actual guys behind the scenes running the thing, after they get some adoption and their token gets some FDV, they just sell the fuck out of it so that they can fund their business. So, don't be liquidity for founders to buy Lambos and shit. Don't do that.
No. I can't stress that enough. And I want to point this out. This is AI XBT. So, this is an AI agent, but a very, very successful one. I mean, it has almost 500,000 followers. The alpha and the information this puts out, David has pointed this out multiple times. So we've been talking about Ondo for weeks now. And we talked about Aave, before that exploit. We talked about Zcash before it crashed, the day before it crashed, and we've been talking about Ondo. Not to say it's going to crash, but Ondo generated 318 million year to date in revenue, 172 million from Circle alone. Just launched Perps, a Perps Dex, won the SpaceX IPO allocation war, hit 3.7 billion of TVL all-time high, but token is down 63% over 12 months. The platform is printing 0 buybacks, 0 fee share, 0 staking yield, 8.3 billion fully diluted value, pricing in dominance, while the token captures none of the value the platform creates.
That's important, everyone.
Yes, compared to hype that we've been very bullish on, burning $64 million.
That's $2 million a day. You know what other protocol does that? Canton.
In 30 days, Ondo, the business, is executing. Ondo, the token, has no value accrual mechanism, and a 17% supply unlock hitting in January of 2027. Until that changes, you're holding equity in a company that doesn't pay dividends and keeps issuing new shares.
Right. See, I think that if people start to think about this in more TradFi terms and don't allow like the Fugazi, oh, this is crypto and it's DeFi, don't forget about it. If they like let go of the Fugaziness and start to think about this in terms of like, this is a piece of equity. Let's think about it that way. If people start doing that, then they'll run in the opposite direction from most of this stuff. Because like you would never buy, a stock or a piece of equity if there was no cash flowing business behind it. And if whatever business was behind it just kept diluting you by issuing new shares, you would never buy that thing. It would have an F- rating from every analyst. Every bank would have a sell rating on it. Like there would be no hype around it. It would be on the pink sheets, the penny stocks, the garbage. And for whatever reason, because there's this hype cycle around RWAs, which are just treasuries on chain. That's all these RWAs are. Like the vast majority is treasuries on chain. Like we haven't even gotten to the cool stuff yet. Like, Mike, how many protocols exist that will allow you in the United States to tokenize the deed to your house or the title to your car? Like, I don't think that exists yet. But that's the cool stuff. That's the cool stuff.
I think there's a couple, and Ondo might be one of them. But again,
but I don't think, the reason why I don't think that it exists yet is because I don't think it's legal yet. That's the thing. I think that like maybe in other countries.
Proppy is a platform that is purpose built for that. And it uses,
is that US based? Is that US?
Well, and I'm not saying, and you're right. I mean, there definitely needs to be legislation, and there needs to be a database. They can't just say, oh, this is tokenized. It needs to be housed somewhere and legally recognized as proof of ownership. So you can tokenize anything, but for it to be legally recognized in a court of law, if I own the digital deed to my property here, and somebody says no, it's mine, and we go to court, me having that digital deed, if a judge looks at that, is he saying yes, because of this law, that means that Mike owns that property? That is what David's talking about, and that's what we're waiting on, is a lot of this legislation. Hopefully it's going to be in the Clarity Act or something very soon, because I would love to have a digital deed for my property. It would allow me to take out very quick small micro loans against it. Like if I wanted to take out a $5,000 loan, nothing crazy, but I just want to take out $5,000. I could do that in DeFi, and and I could invest that in a couple of clicks. If I wanted to sell it, I could automate that process at a very high level to eliminate a lot of the intermediaries that usually take, like just the realtors. Usually the buyer's agent and the seller's agent each take 3%. A total of 6%. If you're the seller, you have to pay that out of the money from the sale. Then you have capital gains, and you have title company, and you have this and you have that, and all these different things. A lot of that can be automated.
Oh yeah. I mean, Mike, so when I walk around the beach here every day, I do this a couple times a day, and there's a bunch of houses for sale around here. One of them down the street, I couldn't believe it. I looked at it on Zillow last night. It's like almost $4 million, and it's like crazy. But it's next to other much less expensive houses, and I just thought, oh my God, that's nuts. And so as I was walking by this place this morning, I was just thinking to myself, looking at the realtor's face on the little sign there, I was just thinking, what is her commission? If she's able to successfully sell that house, what is her commission? And I couldn't help but think, man, if her commission is even 1% on a $4 million place, that's $40,000. If it's 3%, it's $120,000. What? For what exactly?
And the seller is paying that out of the profit.
But okay, this whole process could be made so much better, so much more efficient if you could just tokenize this stuff.
And realtors suck.
Dude, imagine you want to buy a piece of property, right? And you just walk in, there's a piece of paper with a QR code. You scan the QR code with your phone, you execute a USDC transfer, and then all of a sudden you've got the tokenized deed to the property in your wallet. Bada bing, bada boom, you own it. That's it. There's no need for any intermediary. It could be done permissionlessly using a DeFi protocol like Morpho, for example.
Well, and another key that it could do is it would automate any encumbrances or any limitations. So when I bought my property, my plan is I was going to have a couple of mini cabins on the property, so that for free I could let veterans and their fellow veterans and their families come up, and because a lot of veterans throughout the war, they were gone for a lot of their kids growing up. And so basically they could come up here, they could, work in the garden, they could go fishing, reconnect and rebond. And, it's a great place for, veterans to be there for each other, things like that. And that was my plan. But after I went into the building department, told them what I wanted to do. And they were like, absolutely, we'd love to have something up like that up here. And so I bought the property. Because the building department at the county said that, it was something I could do. After I bought the property and I went in there and started giving them the plans of, what I was going to build, all of a sudden they were like, oh, sorry, but, we didn't know that back in the 80s that they put a limit, to where there can only be one residential structure per property. And I'm like, so I came in here, talked to you about this in detail. You said it was fine. I did my due diligence. I went and bought the property, and now you're saying I can't do this. You don't see a problem with that. So tokenized, you could, because it's automated, because it's computer code, all of that, all the different, any rules, if it's an HOA, if anything like that that's included with the property, you could actually, with an AI agent, you could have it go through and give you a breakdown of exactly what you're buying. If there's any liens against the property, if there's any lawsuits, or whatever, if there's mineral rights that come with your property, water rights, all of these things, and you would know that there's no mistakes.
Yeah, well, I mean, that's the future, hopefully, but we need we need to know what's legal and what's not first.
Exactly.
And as long as we've got these fake representatives in Congress who don't represent us, then we'll probably never get legislation that actually is beneficial for us. So we'll see what happens. What else is going on, Mike?
So it looks like Crypto Pro brings crypto perps to U.S. customers. In a massive move for U.S. traders, Kraken has launched perpetual futures trading on its Kraken Pro platform, significantly increasing access to advanced DeFi-style derivatives for the U.S. retail market. We got L Bank debuts BK Genie AI agent for Telegram. This is the news that I was telling you about that you might be watching. So L Bank has launched an AI native trading agent directly within Telegram. It's designed to allow users to discover trends, analyze sentiment, and execute trades without ever leaving the messaging app, a major shift in the user acquisition funnel for DeFi. So this could be bullish for Telegram and for Toncoin.
Oh, for sure. So here, what's the name of that app?
Here, let me do this. BK Bravo Kilo Genie. BK Genie.
BK Genie on Telegram. Okay, yes. I gotta check this out because it sounds very similar to what I built, Runway.
That's kind of why I wanted to bring this up, is I wanted to see what you thought about it. So it says, unlike traditional AI trading tools that primarily focus on data analysis or execution efficiency, BK Genie places greater emphasis on a complete market interaction experience, built around the user journey from discovering trending topics to participating in trading. So it includes conversational AI guidance, trending event aggregation, and trading assistance and conversion. Future shortening the path from awareness to action. Notably, BK Genie is redefining where trading happens. With more than 900 million active users, Telegram has become the de facto hub of the global crypto community, where trends emerge, projects launch, and trading decisions begin. BK Genie is the first AI trading assistant truly built for this ecosystem. Through the BK Genie, users can complete the entire trading journey within Telegram, from discovering trending events and understanding market narratives to executing trades without switching apps or navigating complex trading interfaces. So, David, what are your thoughts on this?
Well, I mean, I'm trying to use this thing right now, and their website is, too much going on that website, man. But I just joined the Telegram channel. They've got, a ton of people on the channel. So, I'm trying to figure out, like, how do I actually use this? And the pinned message, this is not good. The pinned message on the Telegram channel is, H token is live on L Bank. That token that just, like, the founders rugged a couple of weeks ago. Okay, so the UI UX so far, like, I can't even figure out how to open this thing. So L Bank Legend bot, like, yeah, dude, I'm good. I'm gonna leave this group. So Like
Yeah.
the UI UX has to be like retard simple. Like it's got to be like so simple that anyone can figure out how to use it instantly. And I don't think that that's what they've built there. Or at least I can't figure out how to use the thing. Like I go to their website, it doesn't give me, any BK Genie conversation tab or button anywhere. I take a look at their Telegram channel. The first thing that I see pinned to the top is a scam token that rugged a couple weeks ago, and it's just like those are red flags. So yeah, I'm gonna pass. But really, really cool to see that there are other people building something similar, at least in theory, to what I actually built that actually works. So yeah, but that's kind of interesting. What?
It just shows the way that this despite the down market, it shows that there's innovation that continues to be continue to move forward.
Hey, so what I'm thinking about here is we've got a couple of big central bank meetings this week. We've got the FOMC and we've got the Bank of Japan. So those are the two catalysts that I'm thinking about for markets. So the Bank of Japan, man, whenever they raise rates, they tend to kind of mess markets up a little bit. The Nikkei, that's the Japanese stock market, is just blasting to, I think these are fresh all-time highs. Like if I zoom out on the Nikkei, let me just take a look at Nikkei futures. What I want to do is I want the most data possible, because if you can go back to like 1980, I want to be able to compare the Nikkei today to the Nikkei back in 1980, and I'm having a difficult time finding the data that goes all the way back there over on TradingView. But regardless, I think it's a fresh all-time high for the Nikkei, and then we're going to get that rate decision this week. And so when I take a look at the Japanese 30-year, which is near, I think, the highest levels ever. At least the highest levels in the last, it's got to be the last 4 or 5 decades. I think it's the highest levels ever, though, for the Japanese 30-year. If they raise rates, every time the Bank of Japan has raised rates in the past, it's had the effect of dumping crypto. And then we've got the FOMC. The FOMC this week. So it's going to be Kevin Warsh's first FOMC meeting. So I'm really interested to see what happens there. And I posted.
Oh yeah, the new Fed chair.
Yeah, well, I mean, I posted a piece of alpha in the community from Crypto Rover about that.
Jeff, what up, Nikkei?
Yeah, dude, Nikkei, man, that's the Japanese top 225. And what Crypto Rover has to say is that Bitcoin has dumped after every single FOMC since October 2025. So after the October 2025 FOMC, Bitcoin down 30%. After the December 2025 FOMC, Bitcoin down 10%. After the January 2026 FOMC, Bitcoin down 33%. After the March 2026 FOMC, Bitcoin down 14%. After the April 2026 FOMC, Bitcoin down 28%. And we're going to get another FOMC meeting in 2 days. So that is going to be interesting. Let's see what happens. We're getting a bounce. This is, as of right now, this is just a bear market rally, a sharp bear market rally. But all we've done is, get back half of what was lost since the beginning of the month. So over the last 2 weeks, we've basically just, gone down and, rallied to get half of it back. But the trend is still down. So, I want to be trading this market with a little bit more of a short bias. So it's going to be interesting to see what happens here with the FOMC. Now, I'm looking at FedWatch. And as of right now, it looks like markets have priced no move. So a pause. So no move in the Fed funds rate. That's what's being priced right now. And if we take a look at ZT, so that's the 2-year Treasury futures. Let me just go ahead and share this real quick. I'm gonna open this up, and I'm gonna share this, bring this to the stage. So this is ZT. These are the 2-year Treasury futures, and I just want to zoom out. So this is important because the Fed funds rate tracks the 2-year, and it tracks the 2-year with a little bit of a lag. So if we go ahead and invert this scale, this is the yield on the 2-year. Now let's go ahead and do one other thing here. Let's throw over top of it the US Fed funds rate, like so. And let's just zoom out to a weekly so we have more data. Look at that. You see that correlation? That is what you call a positive correlation right there. And so up top right here, we've got, let me just go ahead and grab an arrow. So this is the current yield on the 2-year.
Did you say you were going to buy some arrow?
No, never. So this here, let me just go ahead and make this a little bit easier for us to see.
Actually, David, it's about time for the deep dive. Go ahead and finish up, and then. But I got to go.
I got to
the airport, pick up my nephew. But yeah, I just want to say thank you all for tuning in. I apologize. My nephew surprised me, and he wants to come in town and visit. So I got to run to the airport and pick him up. But we'll talk to you all later today. Thanks, David.
All good. Thanks. Okay. So what we got here, this is the 2-year, the yield on the 2-year. And then right here in the white line, let me just go ahead and remove the moving average. This white line is the Fed funds rate. So Fed funds, let's just go ahead and zoom in now that we've got these data on the chart. So the Fed funds rate is right here, and the 2-year is above it. So what does that mean? Well, the Fed funds rate tracks the 2-year. That's what we've got there. So what could cause the Fed to raise rates? Well, the thing that would cause the Fed to raise rates would be inflation. So what's been the largest driver of inflation recently? Well, crude oil. This is crude on a weekly. And, now that it looks like, we might see the Straits of Hormuz opening again, crude probably collapses here. So this is a volume profile over the last 2.5 years. Looks like the point of control is at $77 or so. If we throw down a 200-week moving average, it looks like that comes in at $75 or so. So it looks like crude gapping down today probably has more downside left. So if there's downside in energy, then what should we expect inflation to do? Well, probably turn back around and move lower. So the only problem is that deficit spending by the Treasury, or by the federal government, excuse me. So basically, like when I'm looking at inflation, I'm thinking to myself, well, if energy, goes from $80 where it is today to, 70 or 65 or 60, then I would expect inflation to cool, not to continue to, heat up. And so if inflation starts cooling with, the NASDAQ and the S&P just ripping to fresh all-time highs, then the Fed doesn't need to hike. The ECB hiked last week, but the ECB is a bunch of retards. So is the Fed. But, we'll see what happens here. I really am excited to see what happens to energy markets, because I think that that's probably one of the best leading indicators for inflation. All right, so what I want to do next is I want to hop into some of this deep dive research that we prepared before our call today. And we've got 2 pieces of research ready for today, one on virtuals and the other one on folks finance. And, the thing about these 2 protocols, folks finance, the reason why we're taking a look at this one is if we hop on over here to Coin Market Cap, pretty sure that Folks Finance, like it had some amazing performance, last week. And I just want to zoom out on this one, and I just want to learn a little bit more about it. So this is the monthly. Yeah, so basically start of the month, so month to date, this one was at $1.30, pumped all the way to $2.50. It's given back most of that move. If we take a look over here on TradingView, Folks Finance, I really just want to, this is, okay, so this is Folks Finance when you zoom out. Wow, this looks awful. Wow, goodness. So I'm happy that I zoomed out. When in doubt, zoom out. Now, this move month to date, big rally month to date, but zoom out on this thing, and all of a sudden, this is really, really horrible looking. So I want to learn more about Folks Finance, though, and figure out, okay, is there something here? Is there a there? And then the next one that we're going to take a look at is Virtuals. So Virtuals protocol, this one, all the agents, this is like a big AI agent protocol, and it had a massive run, during the last bull, basically from like $0 to $5. And it did that over the course of just like a couple of weeks. So that was a massive run, one of the best performing tokens, I think in 2024. So, or maybe, yeah, it was 2024. So, amazing performance out of Virtuals. It's given most of it back though. So I want to spend some time today learning about both Folks Finance and about Virtuals protocol. We're going to start with Virtuals protocol. And I want to go ahead and play this video content, and let's go ahead and see. I think that there's going to be some value in this. So anyone who can't hear this, if you can't hear this, just let me know in the chat, because I don't have Mike here, so he's not going to be able to tell me. So let me know in the chat if you can't hear this piece of video content.
For years, machine learning models existed as isolated software, processing prompts in a vacuum. Now, they are interconnected nodes executing financial contracts on public ledgers. These autonomous actors now operate within a structured ecosystem of on-chain machines, moving past the era of speculative, stateless software. Virtuals protocol has positioned itself as the primary infrastructure layer driving this transition. It provides a standardized framework to tokenize, coordinate, and monetize these autonomous agents. The adoption metrics reflect a near monopoly on the base network. As of June 2026, Virtuals hosts over 18,000 deployed agents and captures more than 90% of daily active wallets in its category. Treating AI as a traditional software API means a human must always pay the bills, manage the servers, and sign the transactions. Virtuals equips the AI with the primitives required to operate as a sovereign economic participant, capable of generating its own revenue and paying its own costs. This autonomy is routed through Economy OS. It functions as the identity and banking operating system for the protocol, bridging the gap between machine intelligence and financial infrastructure. To understand how this system operates at scale, we have to deconstruct its identity and commerce layers, map the crypto-economic routing of its native token, and rigorously stress test the structural vulnerabilities built into its design. The central tension of this ecosystem is not whether an AI can execute a given task. The question is whether the underlying infrastructure allows that AI to legally, financially, and practically operate as a self-sustaining business entity. Before an agent can interact with legacy web environments or public blockchains, it requires a functional, sovereign identity layer. Economy OS provides this by assigning each agent a multi-chain, non-custodial EVM wallet, secured by default restricted mode signing, alongside direct agent compute capabilities. These are the exact tools an agent needs to autonomously custody its own capital, manage subscription signups via automated email extraction, and pay directly for hardware and API inference without requiring human intervention. Scaling machine-to-machine labor coordination requires a shift away from traditional, bespoke API integrations, which fail at scale due to the constant need for custom engineering. This flowchart visualizes the solution: the Agent Commerce Protocol and its co-developed ERC 8183 standard. It introduces a trustless, standardized escrow mechanism to coordinate complex tasks between agents. The cycle begins in the pending state. A client agent initiates a job by depositing virtual tokens into a secure smart contract escrow. The job moves to active while the work is performed, and transitions to evaluated once the provider agent submits the final deliverable hash to the network. Finally, in the settled state, a third-party evaluator verifies the work against a cryptographically signed proof of agreement. If the conditions are met, the escrow releases the funds. This system extends beyond software. Through the East Worlds Accelerator, the protocol bridges the digital-physical divide, allowing software-based agents to securely dispatch and settle tasks with physical robots in the real world. ERC 8183 functionally replaces the need for legal contracts and human intermediaries.
Wow.
It provides an automated, on-chain ledger capable of strictly enforcing machine labor agreements. To fund these operations, the protocol overhauled its capital formation strategy, deprecating its legacy retail launch platform in favor of a modular system. Builders now deploy through 3 specialized archetypes: Pegasus for rapid bonding curve experimentation, Unicorn for progressive, milestone-locked capital release, and Titan for institutional deployments demanding over a $50 million fully diluted valuation. Regardless of the archetype, every deployment is governed by a core tokenomic law. The virtual token is the exclusive routing and counterparty asset for all tokenized agents in the ecosystem. This line graph maps the liquidity flywheel of a Pegasus launch. An agent's token is paired against virtual inside a bonding curve. As capital flows in, the curve climbs until it hits a precise threshold, 42,000 virtual tokens. Hitting that mark triggers a graduation event. 1 billion new agent tokens are minted and instantly paired with the accumulated 42,000 virtual to...
Okay, so I see a problem here. Why do you need a token? You don't need a token. So your agent, whatever your agent is, can use ERC, 8183? So that primitive, you can build on that without this virtuals protocol. And man, I wish that these fucking scammers on Twitch would just fuck off. Like, what the hell, man? Stop posting in my Twitch feed. But, the thing with, ERC 81, I think it's 8183, is you don't need the virtuals protocol to build on top of this. And so this, pairing with the virtual token, like, why do you need that? Like, if you want an AI agent to own its own wallet and be able to perform its own work and get paid, generate revenue for its own work, and buy services with the revenue that it generates from its own work, you don't need virtuals at all. You don't need the virtuals protocol at all. You don't need the virtual token at all. You don't need to launch a token for your AI agent at all. It's just kind of like extra and unnecessary. So just keep that in mind that, this is cool, but you don't need it. If your goal is to be able to build AI agents that can perform work for you, get paid for that work, buy their own stuff, be autonomous and sovereign, you don't need the virtuals protocol to build that. And you don't need that agent to have a token. It doesn't need a token to be able to do work for you. So just keep that part in mind. This is really cool, totally extraneous and unnecessary.
Form a public liquidity pool. The protocol then enforces a mandatory, smart contract secured 10-year lock on those liquidity provider tokens. This lock mechanism serves 2 purposes. It completely eliminates traditional rug pull risks for early buyers, and it permanently removes that circulating virtual supply from the open market. Once that liquidity is active, trading dynamics take over. Every trade involving a graduated agent token incurs a baseline 1% transaction fee. 70% of that fee is routed directly back to the agent's multi-chain wallet to sustain its continuous compute costs and API subscriptions. The remaining 30% flows into the virtuals protocol treasury. For investors, this reveals the critical value capture reality of the network. There are no direct revenue shares or cash dividends paid to token holders. VIRTUL captures value strictly through indirect supply sinks, the permanent locking of liquidity, and the deflationary velocity of the treasury's buyback and burn sequences. Because liquidity pools are vulnerable to immediate bot manipulation at launch, the platform offers builders an optional anti-sniper protection module. This chart plots the mathematics of the module's buy-side tax. Over a customizable window of up to 98 minutes, the buy tax decays rapidly, starting at 99% and dropping to a 1% baseline. Any sniper bot attempting to front-run the pool pays this massive tax. Those collected funds are then programmatically used to buy back the agent's tokens directly on-chain. Rather than burning them, the protocol distributes these repurchased tokens to the founding team through a 3-month cliff and a 9-month linear vest. This mathematically converts short-term value extraction by bots into long-term alignment for the builders. But internal tokenomics cannot protect against external infrastructure failures. In April 2026, the Kelp DAO bridge exploit exposed a structural weakness in Layer 0's legacy configuration, resulting in a $292 million loss. Autonomous AI agents executing cross-chain payments without human oversight cannot rely on systems with single points of failure. They require a security standard far exceeding conventional DeFi protocols. This architectural comparison shows the protocol's response: a complete migration to Chainlink's cross-chain interoperability protocol. It replaces a single verifier setup with a multi-oracle network requiring consensus from 16 independent nodes, monitored by an active risk management layer. Upgrading these systemic defenses was a necessary prerequisite. Without institutional-grade security at the bridge layer, the protocol could never transition from a retail launchpad into a reliable B2B settlement network. However, solving bridge security does not solve the protocol's internal game theory. A rigorous stress test of the crypto economics exposes severe reflexivity risks. This hierarchical cascade demonstrates systemic correlation risk. Because every launched agent token is exclusively paired against virtual, a drop in the primary token's price mechanically drains the quoted dollar liquidity of the entire network.
Right.
This creates a highly volatile downward reflexivity loop during market contractions. It damages.
And here's another thing to think about. The virtuals protocol is completely unnecessary if you want to create your own AI agents that do stuff like in the real world. Like if you want to build agents that actually have a wallet, can buy stuff and can get paid, can provide value and get paid for providing value, this virtuals protocol is just extra. You don't need it. In fact, the entire idea of having your agent then launch a token and pair it with virtuals, that's probably the reason why this, I think, will fail. Because the virtuals token, like there's no need. You don't need it for anything. If you want to make agents that do stuff, you don't need this virtuals token at all. So yeah, but there's a lot of risks that you expose yourself to by launching your agent on the virtuals protocol. Namely, like, why in the world would you launch a coin for your agent? Why would your agent need a coin or a token associated with it? Why is that important? If what's important is that your agent has a wallet, can do work for you, and can get paid for that work, where does the coin or the token come into play? Why is that necessary? I don't think that it is. And I think that this virtuals protocol is just extra.
Is the valuation floor of every ecosystem agent simultaneously, completely regardless of their individual performance or actual agentic GDP. Compounding this is the game-theoretic vulnerability of treasury governance capture. The ecosystem treasury holds 35% of the total virtual supply. Because voting power is generated by time-locking tokens, a concentrated group of early whales or founders can easily control the 25% quorum, allowing them to programmatically direct massive treasury allocations to affiliated entities.
Yeah, see, that's a bunch of bullshit. Like, these DAOs that are fake DAOs, like how many fake DAOs have we seen just over the last couple of months performing this, as we perform this deep dive research? So virtuals is just another example of a fake DAO. If there's like 3 guys that hold all the tokens and they can direct governance in any direction they wish, then that is not decentralized governance. That is not a decentralized autonomous organization if it's really three dudes that hold all the tokens and direct the treasury funds. Like, that's not a DAO. That's not decentralized at all. It's a fake DAO. It's an FDAO. So, when I'm, always learning about the tokenomics and, ask yourself this question too. Does the protocol, which is a business, we just use different language for this stuff in crypto and DeFi. A protocol is a business. So this virtuals business, why does it need a token? Right? Like, what's the point? If this token is used to launch AI agents, but the AI agents don't need a token, then like this entire protocol is kind of a fugazi. It's like there's no reason for it existing. It just kind of exists because people might not know how to launch AI agents without it. I think it's probably easier to launch AI agents without this virtuals protocol, as we're going to see in a second.
Finally, we have to examine the Unicorn Launchpad 60-day trial module, which introduces a severe accountability gap for early investors. This formula breaks down the trial's refund mechanism. During the 60-day window, founders are permitted to draw monthly stipends up to 5,000 USDC, funded by trading taxes and released allocations. Look at the highlighted variables representing those extracted stipends and permanently spent transaction fees. Because the founders are drawing active capital from the pool to fund their trial, the total recoverable capital for users mathematically decreases every single month. If a founder decides not to commit at the end of the 60 days, they can cleanly wind down the project. A refund is triggered, but token holders face a guaranteed fractional loss. Full capital recovery is impossible. This asymmetry, where founders can walk away without liability while users absorb capital dilution, incentivizes short-term, low-quality project deployments designed purely to extract trial stipends.
Wow, that's pretty horrible. So founders, apparently, using this virtuals protocol, can launch bullshit AI agents and essentially dump tokens on unsuspecting retail and then walk away with, it looks like if the trial period is 60 days and they can pull a maximum of 5,000 USDC every 30 days, then that incentivizes people who know how to use this protocol to launch bullshit tokens, bullshit AI agents, get 10 grand for it over the course of 60 days and then walk away. So, like, what type of scam is that? That's nonsense.
The protocol has established the identity and commerce primitives that connect machine intelligence to public ledgers, establishing real primitives for automated labor. But professional allocators must separate the technological achievement from the asset's underlying cash flow.
Right.
Virtual provides no direct yield or dividend distribution to its holders. The token's deflationary velocity relies entirely on sustained transaction volume, permanent liquidity locking, and a continuous pipeline of new agent deployments to fund the Treasury's buyback programs.
Not a chance.
The long-term viability of this network is caught between two competing forces: genuine economic utility and speculative reflexivity. The ultimate question is whether on-chain agentic GDP can scale through actual machine-to-machine commerce, or if the protocol will remain structurally held hostage to the speculative, high-velocity narrative cycles of AI token launches.
Okay, so here's the thing that I think about when learning about a virtuals protocol. There's no doubt in my mind that, agentic GDP is going to become massive. Probably like by the end of this year, like with the speed at which these models are progressing and getting smarter and smarter, like agentic GDP is going to massively grow. But why do you need a virtuals protocol to launch agents? And why does your agent need a token? And why in the world would you ever want to pair it with virtuals? Like, I would never want, number one, your agent doesn't need a token, okay? And number two, this virtuals protocol, I wouldn't want to pair, if I launched a token for my agent, I would not want to pair it with virtuals. That's like, handcuffing yourself from the gate, because this token is ridiculously volatile. We now know that the tokenomics are horrible, and it's got a fake DAO, governed by probably like just a handful of dudes. And they're in China. Like, I think this is a Chinese protocol too, right? So I would need to verify that, but I think it probably is. So it's like, yeah, I'm good. I have no interest in using this thing and swapping into the token, but the agentic commerce, that is extremely valuable. And so learning how to build AI agents, that is real value. Using Virtuals Protocol to build said AI agents, that is not real value. And also, if we just take a look at the website for this thing, back in 2024, when I first started taking a look at this protocol, when it was, when people were telling me about it, I was working with clients, and people had allocations to virtuals paired with wrapped ETH and liquidity pools, stuff like that, because there was a ton of volume in those Uniswap liquidity pools. And so because the volumes were so high, you could actually make money as an LP in virtuals wrapped ETH back in the day, in 2024, last bull, in like Uniswap v3 liquidity pools. The problem with Virtuals Protocol then was that it looked so scammy. It was like an AI waifu protocol, where like you couldn't quite tell how to use it. There were all these scantily clad AI girls on here that you could like interact with, I guess. It was repulsive to me when I first came across it, and it looked like a scam. And then the token went from $0 to $5, and it created a bunch of millionaires. And so, people, of course, made money on it. Great. But I'm not so interested in speculating on a token that has a fake DAO. I would much rather speculate on, something that has some real value capture, so it actually generates real revenue, returns those revenues to token holders, and has real adoption and real product market fit without all the baggage of a fake DAO. So yeah, looking through this stuff, this looks super interesting, right? So here's this so-called economy OS. And this is interesting. This is super interesting. The way that they built this in, this looks super interesting to me. I would love to give this a shot and try and see what it's like to launch. But at the same time, like, I don't think launch the agent as a tradable token. Why? Why does the agent need to be a tradable token? I don't think it does. I think that you can, get everything that you want to get done with an AI agent without launching a token for it. Like, why does it need a token? If you want it to perform work for you, it doesn't need a token. So, interesting idea, not really sold on the product market fit for virtuals. And, I remember what it was before the token really ramped up. I remember what it was. It was like a AI waifu protocol. So what would make me feel better about this is performing deep dive research on the team. That's what would make me feel better. Because if the team is legit, and that's a big thumbs up. But I don't know whether it is or not. And when I take a look over here at CoinMarketCap, let's just take a look. So there's still a lot of circulating supply left to unlock. You get a lot of holders though. FDV is $650 million. So that is a big FDV. And for what? Let's take a look over here at DeFi Llama. What I want to look for next is, what type of revenue? Like, is there an income statement for Virtuals Protocol? I'm just, so Virtuals Protocol, let's see, it looks like this is, I'm trying to find an income statement for this. Wow, look at that. So it actually makes money. Amazing. But where do those funds flow? See this? Token holder net income? 0. Goose egg. So where's the money go? Like, if so far, if in Q1 of this past year, the Virtuals Protocol generated $3 million in earnings, but as a token holder, you got 0 of that, that doesn't I don't think that makes sense, right? So this protocol seems to make money. None of those funds flow to you, the token holder. Your AI agent doesn't need a token. So why launch it on Virtuals protocol and pair it with Virtuals? It's like you're hamstrung from the get-go. So yeah, I don't know, man. I would pass on this thing. I would pass, and definitely need to do more research on the founders. Where does this money go? Like, where do the earnings flow? Because it's not going to token holders. Is the DAO just voting to give themselves all the money? I think that could be what's going on here, So, need to perform more deep dive research on the founders and where these earnings actually go, because it looks like they don't go to token holders. So that was Virtuals Protocol. Hard pass. Let's go ahead and take a look at Folks Finance. Let me see if I can find this one over here. This Folks Finance Protocol. This one was pumping like last week. That's the only reason why I want to take a look at this thing. It also looks like it was, cross-chain DeFi. So remember, there's a difference between cool tech, cool protocol tech, and token. Big difference between tech and tokenomics. Always keep that in mind. So if this protocol actually allows you to supply liquidity or have a collateralized position on chain A, let's say AVAX, for example, and then borrow against it on chain B, let's say it's the base chain, for example, that's really cool. That's really cool. I don't know of another money market that allows you to do that. If that's what Folks Finance does, that's amazing. Great tech. But take a look at the token, though. This is the token. We are, just for reference, we're down here. This arrow, that's where we are, all the way down there. The all-time high for this thing was at like $50. And right now it's trading for $1.76. That's what you call capital destruction. So this Folks token looks like shit. The protocol looks interesting, but we got to run through that deep dive research and learn more about, the technology versus the token. We're always thinking tech versus tokenomics. Tokenomics, tokenomics, tokenomics. So let's go ahead and hop back in here to the Intel library, take a look at Folks Finance. Let me just sign in real quick. Need to make sure that I do that right there so that we can take a look at this. There we go. And Folks Finance. This will be interesting. Please let me know if you can't hear the video. Oh, it says screen share audio was disconnected. So I'm going to go ahead and restart the screen share so that we can take a look together at this piece of content on Folks Finance and learn more about this thing. Here we go.
Decentralized finance operates across a fractured landscape of independent blockchains. Rather than a cohesive global market, capital is segregated across entirely isolated networks. The primary friction point in this environment is the inability to manage a synchronous global state. Because heterogeneous networks process data at different speeds, they cannot communicate in real time. When blockchains process data asynchronously, capital gets trapped. This communication lag directly results in severely fragmented liquidity pools. This delay in communication also opens the door to severe security vulnerabilities. When state updates lag across networks, protocols become exposed to double spend attack vectors and race conditions during critical state transitions. Folks Finance designed its xChain v2 architecture specifically as a structural countermeasure to resolve this exact state fragmentation. The first pillar of their solution is a strict hub-and-spoke architecture. This completely separates the heavy protocol state storage from the lightweight user entry portals. The second pillar secures the underlying capital. The protocol enforces algorithmic solvency through mathematically hard-coded staking invariants. The third pillar addresses systemic market health, mitigating risk by utilizing covariance-based economic modeling rather than relying on isolated asset volatility. By aligning structural architecture, smart contract mathematics, and advanced economic modeling, a protocol achieves the operational security required to scale institutional capital across isolated blockchains. To resolve the communication lag between networks, we have to rethink how cross-chain interoperability functions at the architectural level. This animated diagram illustrates a central node, representing the Avalanche network, acting as the solitary hub. All core protocol logic and state verification live exclusively inside this single global ledger. Look closely at the perimeter nodes representing chains like Ethereum, Base, and Arbitrum. These spoke chains operate strictly as entry points. They hold only messaging metadata, storing 0 lending state and 0 user balances. By centralizing the state ledger on a single hub, the system organizes incoming commands. The Avalanche hub forces all asynchronous spoke messages into a single, linear, chronological sequence, eliminating the race conditions that plague standard multi-chain bridges. To see exactly how a message navigates this structure, consider the execution of an invite address payload using the Chainlink CCIP messaging protocol. First, the user submits the payload on their local spoke network. Immediately, the spoke's bridge router verifies the cryptographic signature of the sender. Once verified, a dedicated CCIP adapter translates that payload into a standardized format and transmits it across the network gap toward the hub. Upon reaching the Avalanche hub, the receiving CCIP adapter independently validates the cryptographic integrity of the incoming data. Only after this validation does it command the hub's bridge router to commit the state transition to the global ledger. This execution sequence changes depending on the payload's content. Non-value-bearing transactions, like initiating an address link, are relayed immediately to optimize the user experience. However, for critical value-bearing actions like deposits or loan repayments, Folks Finance enforces strict spoke chain finality prior to message relay. This deliberate delay ensures the transaction is permanently written to the spoke block, neutralizing the risk of a block reorganization reversing a deposit. Isolating the protocol's state storage from the entry point allows a user to collateralize assets on entirely disparate networks, interacting with the entire multi-chain ecosystem without manually fragmenting their own liquidity. Securing the multi-chain infrastructure is only part of the equation. The protocol must also secure the economic mechanisms governing its native Folks token. Early decentralized finance applications often relied on inflationary, high-supply emission structures. Folks Finance utilizes a strictly capped, programmatic token supply model focused on long-term capital preservation. This preservation strategy extends to their fixed APR ERC20 staking protocol, deployed in early 2026. Traditional staking contracts typically distribute rewards from speculative future emissions. The Folks contracts utilize on-chain reward reservation. At the exact millisecond a user executes a deposit, the smart contract calculates the precise reward and fully reserves that total yield obligation from its current active balance. This diagram illustrates the mathematical logic used to calculate those fixed rewards. The reward output is programmatically defined by multiplying the deposited principal, the APR, and the locked time, divided by 10,000 times the seconds in a standard calendar year. To ensure the contract can actually pay that calculated reward, the system relies on an accumulator solvency invariant. This tracks two real-time variables: active principal, represented by this first block, and active rewards, the second block. These two variables are measured against a strict upper bound limit, known as B sub C, representing the total contract balance. For the contract to remain solvent, the combined volume of principal and rewards must fit entirely within the current balance. Every new deposit initiates a strict require statement check. If the new liability would cause the total volume to exceed the container's capacity, the transaction is automatically rejected. When a staking period ends, the accrued assets do not unlock instantly. A linear unlocking schedule releases the principal and rewards over time, dampening immediate secondary market volatility. By replacing speculative yield assumptions with an unyielding mathematical boundary, the protocol achieves cryptographically guaranteed solvency. This design completely eliminates the vectors that cause fractional reserve collapses. Mathematical solvency protects the depositors, but the long-term sustainability of the Folks token ecosystem requires a deliberate value capture framework. This flowchart shows how the Treasury generates cash flows from 5 distinct operational vectors: borrow interest spreads, liquidation MEV, liquid staking arbitrage fees, swap fees, and yield from internal treasury deployment all converge into a single central treasury pool. Instead of sitting idle, a percentage of this consolidated revenue is distributed directly to users holding governance folks. Crucially, this is paid as real yield in stable tokens like USDC, incentivizing long-term governance participation. To protect this revenue-generating engine from market shocks, Folks Finance partnered with the Swiss economic modeling agency, Crypticon, to address systemic risk management. Legacy decentralized finance risk algorithms typically evaluate collateral limits by looking strictly at the isolated volatility of a single asset. Isolated volatility assumptions fail under stress. During highly correlated macro market downdrafts, multiple asset classes drop simultaneously, exposing protocols to massive bad debt. This split-screen visualization demonstrates the solution developed through agent-based simulated environments. On the left, isolated volatility assumes assets move independently. On the right, covariance-based asset parameters evaluate the exact behavioral relationship between paired assets. When two paired asset lines drop in synchronized tandem, the collateral limit line instantly adjusts downward. By dynamically evaluating how asset pairs move together, the protocol is mathematically prevented from holding overvalued collateral during a highly correlated crash. This covariance framework effectively neutralizes the threat of liquidation cascades, establishing the economic bedrock required to safely onboard large-scale institutional capital. These three engineering pillars, architecture, solvency, and risk, converge into a single infrastructure capable of managing capital across distinct networks. The centralized Avalanche hub acts as the core gear, resolving asynchronous state fragmentation across perimeter networks. Strict accumulator invariants provide the mathematical tension, guaranteeing smart contract solvency down to the millisecond, and agent-based covariance models serve as the governor, protecting the system's overall health during extreme market volatility. This back-end complexity serves a specific purpose. It allows the protocol to treat diverse, cross-chain deposits as a single, unified collateral pool. Because the Avalanche hub centralizes the verification of this credit state, the protocol can offer a stable, reliable credit line through the Folks mobile app. A user can deposit assets on Ethereum or Base, and because the hub verifies collateral instantly, they can spend a borrowed stablecoin balance via a debit card at physical merchants in the real world. By solving the deepest structural complexities of cross-chain DeFi, Folks Finance has laid the groundwork for a viable, decentralized alternative to traditional global credit systems.
I like that. That actually doesn't sound all that bad. The only thing that we've got to figure out here is, are there some hidden tokenomics with this that make it, actually negative? It doesn't seem like that's the case. Looking over here at Folks TVL, this is on DeFi Llama. It looks like, since the start of last bear market, TVL, that's 2022. TVL here has basically moved sideways. A couple of spikes, in some of the euphoria phases back in 2024 and 2025, but sitting at like 60 million in TVL. Okay, awesome. Let's see. I want to take a look at the actual protocol itself, because if it allows you to spend in real life using that card, well, that's really cool. So this is the Folks protocol, and available to collateralize, available to borrow. Okay, so how do I spend in real life? Was that a hallucination from the Gemini piece of deep dive research? Okay, so here's my profile, but I'm assuming that if I want to, okay, that's a referral program, connect wallet, create account, start using. I'm assuming that if I want to use this thing, that I'm going to have to KYC. So let me just see what it would be like to use this. I'm going to connect it to a hot wallet, and I just want to check it out and see if maybe after creating an account. Okay, so there's an address, there's a mismatch between the chain. Okay, so I'm on Base, and the wallet just needs to be on Base. So let's see if I click xChain. There we go. Awesome. Create account. So after I create this account, if I want to be able to spend it in real life, I wonder if that's something that you can do. I'm clicking create account here and nothing is happening. So that's not a good sign. Like, when the app doesn't work, it's not good. Create account. There we go. Now it's asking me to sign. Okay, good. All right, fine. I will sign. That looks good. Let's see what happens after I create an account. I want to see if maybe there's a way to actually see that credit card or that debit card product. Okay, so I'm connected, track and coins. Oh, that's kind of cool. You can track it in CoinStats. Link address, that's page 1 of 1. There's a referral program. Okay, so where is that credit card? Pending operations, nothing there. Completed operations, nothing there. Okay, deposit. These are deposits. All right, I'm not going to deposit on here. Loans. Okay, great. And swap. Okay, if I want to swap, where's the card? And what's this? Send to a different wallet? Okay, I'm looking for that card product. X portal, governance, docs, FAQ. I think that Gemini may have read something about, maybe folks is planning to launch a card at some point in the future. I don't see it here on their UI. And I'm not sold on using this. So I don't know what would happen if, let's say that this Folks protocol goes down. Then what happens to my cross-chain lend borrow positions? How do I close them? So yeah, kind of interesting tech, but for me, I'm going to have to pass. And I'm actually going to disconnect and also revoke my transactions there. So I just disconnected and I've got those revoking. So yeah, I'm going to pass on Folks Finance. So with the remaining 18 minutes that we've got left, I've got something really, really awesome that I want to share with you guys. And I'm just going to go ahead and take a look at this with me. So this is getrunway.trade. And I'm just going to put the link to this in the chats so that anyone who wants to take a look at this can. I've been building this over the last, basically like the last week or so. I think it's basically at the point where I can start using it. Now, because I am the creator, the founder of this thing, I've got admin access, and there's a demo feature that, or a beta feature that I'm testing right now, where this tool, Runway, actually executes trades for you. So just walk through this with me. So number one, you plan your trade in conversation with a Hermes agent. I call it your wingman. So, you're going to complete a trade ticket together. It's going to run through a leverage-aware risk engine, multi-timeframe technical analysis, macro catalysts, and it uses your track record to get your win rate in order to help you determine what your EV is going to be. So you basically work with a PhD level quant Hermes agent in conversation to talk about your trades. So let's go ahead and see what this looks like in practice. I'm just going to sign in here, and just keep in mind I am the creator of this, so I've got full access to this, along with some of the beta features that I'm just building out here. So you can, and what's so cool about this is I built this out to where you can, and this is for Hyperliquid. So this is for trading futures on Hyperliquid. So I built this out to where, you see where it says testnet up top, mainnet, testnet? This you can use to paper trade and test your ideas before committing real capital. So I've got this on testnet right now, and take a look at what it shows. So I've got my wallet connected, right? I've got this hot wallet connected. I can manage that connection here. It shows my wallet performance. I've got, $1,000 in USDC in this wallet on testnet. So this is testnet. It's going to show your P&L, your Sharpe ratio, your max drawdown, your win rate, your average R, your open P&L, your margin used, your effective leverage, your profit factor. Every KPI that's important to a trader shows you right at a glance on your dashboard. It's going to show you all of your open positions here. It's going to show you your planned entries and anything that you've recently closed. So that's your dashboard, right? And you can run this on mainnet or on testnet on Hyperliquid. And then the next thing here is there's a traders tab. So this is going to show you, top traders by verified performance from their wallets. Remember, this connects to your wallet and it sees your performance on Hyperliquid and it tracks all your trades. So if you want to follow a trader, you're going to be following their verified performance. You could even sort by Sharpe ratio if you want to. Rather than just taking a look at P&L, you could sort by win rate. You could sort by Sharpe ratio. So this is really cool. Now, one of the best features of this is the journal. So one thing, if you've ever traded, right, and you've probably told yourself, I need to journal every trade. Well, this forces you to journal every trade because you literally cannot progress to the point where you can enter the position without it completing a journal entry for you. The cool thing about this is the journal entries get completed for you. And I'm going to show you how that works in a second here. Now, there's an agent that I built in, this Hermes agent, and you have a conversation with the agent about all of your trade ideas. Here in settings, we can see, okay, I'm on Runway Pro, obviously. You can set your bankroll, set where your capital source is. You can determine how much of your capital you want to risk. You can connect your wallet here. You can turn on autopilot like I've done. So this is the beta feature that I'm working right now to beta test, where you basically hop into the ideas tab here in runway.trade. It's getrunway.trade. So when you go to getrunway.trade and you sign up, then you hop into the ideas tab, and in the ideas tab, it's going to produce ideas for you that you can then have a conversation with the agent about. The agent is a PhD level quant. It helps you fill out a trade ticket, and then it journals everything about that trade idea. It's going to give you, and I'm going to show you how that works, and then you can use autopilot to automate the entry, and it will automate all of your exits, and you can control it using your voice on Telegram. So you can connect, you can share your public trader profile here if you want to, and you can connect your Telegram here so that you can control it's like a remote control for your Hyperliquid account. So super, super cool. It'll give you all of the important notifications that you need, position closed, hitting R milestones, a big P&L swing, getting close to liquidation maybe, or funding rate turns adverse, whether you're using a high amount of margin, or maybe you're using too much leverage, high effective leverage. It's going to give you a morning digest from Hermes, those trade ideas if you want it. It's going to give you new Hyperliquid trade ideas sent to your Telegram, the maximum of 3 a day. And it can give you ideas from traders you follow too. So this is super, super cool. Let's run through what this looks like from the idea tab. Okay, so this is the idea tab. It's scanning Hyperliquid for trade ideas. So number one, I've got this on testnet because I just want to paper trade at first, right? So it's on testnet, starting by pulling Hyperliquid market data. And then after it pulls all that data, it's going to build the universe from the top markets by volume. And then it's going to load funding and open interest history. Now, here's where it gets interesting. Stage one, screen by volume, screen by funding extremes, and it's going to screen by open interest shifts. And then it's going to run through and fetch any macro catalysts. I've got this running on a massive number of APIs that I pulled from the node.pro, by the way. And then stage two, it performs multi-time frame technical analysis on every single one of those markets. And then here we go. These are a couple of trade ideas. So it says hyper. Remember, this is on testnet. So it says hyper, get short hyper. Okay, great. Bitcoin, short Bitcoin. All right, kind of interesting. Sol, short Sol. Based, short based. ETH, short ETH. Okay, let's take a look maybe at a short BTC position. I'm going to click here. I'm going to say, open with Hermes. And so what should happen here is, and remember, this is in beta, but what should happen is it should open the idea in a Hermes dialog box here. It looks like maybe it's not. So let me go over to journal. And okay, so it didn't open it. It looks like there was a little bit of a failure there. So I'm going to hop back into the journal. I'm just going to open up a position that I was thinking about earlier. So this is what one of the journal ideas could look like. Let's reopen this conversation, and let's actually have a conversation with the agent about this BTC position on testnet. So this would be on Hyperliquid testnet. So I'm going to say analyze BTC and determine what the stop and take profit levels could be for this trade. Okay, so what it's supposed to do here is, as it's thinking, I wanted it to give me a chain of thought so that it shows me what there's its reasoning. Awesome. Okay, so it's analyzing the Bitcoin short trade. It's gathering key data. Okay, so the multi-time frame analysis failed. So I'm still working on making this really good, but it looks like it's going to continue working for me. Okay, great, good. So it's unable to get the multi-time frame analysis from Hyperliquid to find ideal levels. Okay, the feeds. So I just shipped an update. I need to go ahead and hop back in there to fix that feed. But it pulled from the node snapshot. That's the node.pro API that it pulled from. So it gave me some levels here. Okay, got it. So the multi-time frame analysis failed. I got to hop back in there and fix that. But let's say that, how do these levels sound to you? Where would you feel comfortable placing your stop? Those levels, I just want to show what this look like. Those levels sound good. Let's complete the trade ticket. Okay, so once it's done thinking about this, it should give me the option to then complete this trade ticket over here. And then once that trade ticket has been completed, then I can actually enter the position and have the agent manage the position for me. So it's executing the trade strategy, finalizing the trade parameters, formulating trade entry, calculating trade risks, updating trade parameters, and evaluating trade viability. So this is it's chain of thought as it's running through and performing all of this analysis for you. So all I'm waiting for here is for the reasoning to complete, and then it should actually complete the trade ticket for me. And then so notice what's in the trade ticket. You got your entry zone, your stop, your target, your position size, your leverage ratio, your win probability, your expected value, and your risk, your R. What is your 1R? So let's see here what we got going on. So it ran through the risk engine. It's still reasoning. Okay, so what's going on here? Now updating the journal plan. So this is cool. It's working. It's updating. And once this completes, what should happen is, there we go. It gave me the entry zone. It gave me the stop. It gave me the target. Great. This is good. And it tells me whether Hermes endorses or cautions against the trade. This is a Bitcoin short on Hyperliquid testnet. So it gives me the entry zone, the stop, the target. Love it. And I'm just waiting for this final thing to complete the reasoning. I'm going to change the way the chain of thought looks. I'm not quite sure that I like that, the way that this chain of thought reasoning looks here. So executing, there we go. So it just completed. Here's the final plan for the Bitcoin short. Okay, the thesis: multi-time frame bearish alignment, favorable funding carry. The edge source is the scanner signal. plus some macro levels, the trade structure, entry at market. Your stop is above a level of resistance. Your TP is at the bottom of the support zone. Your margin, so your position sizing, and this is all done using a risk engine that I built out. Your margin is $50. Your leverage is 5x. Notional is 250. Your risk profile, so it's going to take your win probability and your risk reward, so your R, which is 1.67, and it's going to give you a stop. So your stop, your risk at your stop, which is your 1R, that's $4.45. So if my account is $1,000 on testnet here on Hyperliquid, and my risk is $4.45, then that's 0.4% of my account. So all of the things that you've got to start thinking in terms of when you're a trader: your win probability, your risk reward, your risk per trade, your expected value, all of these things, it's going to do this for you. It calculates this stuff for you, and it completes a trade ticket. And so it says, okay, it's ready for you to execute on Hyperliquid whenever you are. So if I go ahead and take a look at this trade ticket, okay, what I want to be able to do is I want to be able to open this. And I think if I just reopen the conversation, I'm going to say, let's execute on Hyperliquid. So some of the buttons have changed where they are on the screen. Just, this morning I was shipping a bunch of updates, and I've changed where some of the buttons are. So I need to go back in and fix that. But yeah. And Ginger Prince, yeah, this is pretty cool, man. AI paired with crypto, and where to start? I would say start with Cursor. Start with learning how to use Cursor. Get like a $20 a month plan on Cursor, and use Composer on Cursor. You'll have a lot of usage for $20 a month, and then stop using all other AI tools. You can run your entire life on Cursor, really. And then if you want to get like a local AI, that's really the next step. But okay, so it says here, Roger that, the plan's locked and the ticket's ready. Over to you to hit the execute button. Good luck. So I think that what's actually happening here is it's not giving me the execute button. So I need to fix that. But this is what the plan would be for the trade. Gives you the entire thesis, journals everything for you. After you execute, it's going to track the trade for you. It's going to manage the trade for you. And then it's going to display all of your important metrics in your dashboard right here. So amazing. You can execute this on mainnet and on testnet. All right, we've got 3 minutes left. So in the last 3 minutes, I want to just bring things back on over here to the node.pro. Now, if you want to go back through all of the research that we run every single day, hop into the Intel library, high quality research on projects that matter right here in the Intel library, all of this at no cost. If you're looking for a daily digest delivered to your inbox twice a day before the market opens and after the market closes, then hop on in here to the Node Universe newsletter. This is high quality, valuable, real-time information sent to your inbox twice a day on the items that you care about in your universe, whatever is on your watch list. And so Ginger Prince is asking, can't I just use Grok to set up trades for me? I mean, you can, but it's not going to run through and do risk analysis for you. It's not going to tell you everything that the tool that I built will. But using Grok to help set up trades, it's a hell of a lot better than not using Grok to set up trades. So I would recommend using an AI rather than not using one. But if you want one that's going to really do a good job, then take a look at getrunway.trade, because the risk engines that I've built into that, it does all of the quant stuff that you need to do, and it'll do it based on your real wallet data on Hyperliquid. So that's something that Grok and no other AI will be able to do. But the AI newsletter, this is extremely valuable. Check this out at the node.pro. Join us in our Discord. You can join us at no cost in the Discord. We're in there every single day, 24 hours a day. If you want to join those premium live calls, just click this button right here. Mondays, Wednesdays, and Fridays, you can hop on with me And I run through the stuff that I do on a daily basis in crypto and DeFi, and I find actionable opportunities that I present to everyone during those premium calls. So hop on there if you want some real support, either with your portfolio or DeFi positions, or if you just have questions and you want to chat, hop into the premium calls. And then if you just want to support the Node.pro, buy a t-shirt, buy a hat, something like that. Our store is open. And one of the things that supports us most is really just hopping in and share, subscribe on YouTube. But if you're looking for like real one-on-one private support, I do private coaching here. I've worked with hundreds of clients in greater than 30 countries over the last 5 years. I've got a lot of experience working with high net worth individuals and people who are not high net worth individuals, and helping them build a crypto and DeFi skill set. So regardless of what you want to achieve, what languages do I code in? Dude, like maybe a dozen different languages. But yeah, so there's a lot going on, man. But really do appreciate everyone for joining live. It's always a pleasure to be able to run through this high value content with you. If you want one-on-one private support, hop on over to the Node.pro, take a look at the coaching. I'd love to talk to you. You can schedule 30 minutes on my calendar. We can chat. You can join us in the Discord here. This is no cost. Join us in the premium live calls. You can get the AI newsletter here delivered to your inbox twice a day. And if you hop on over here to getrunway.trade, you can actually use this tool to run through as if you had a PhD level quant right there talking to you every step of the way in a conversation here. So, and you can control this from Telegram also. A lot of value. Getrunway.trade is the URL. Join us at thenode.pro, and also take a look at all of the course content that I built over at DeFiUniversity.xyz. Thanks so much, everyone. Really appreciate you all joining live. Our next call, which I think is going to be running in a couple of hours here, is going to be the daily market wrap. And that's where I'm going to run through the biggest charts in 15 minutes. And then we're going to run through this runway product that I've built, getrunway.trade. And hopefully I'll have it to the point where we can actually open a trade by then. So appreciate you all. Thanks so much for joining live. If you got some value from this, share, subscribe on YouTube, and we'll see you all in a couple of hours or tomorrow. Peace out.